What is going on, investors? Hopefully guys are doing well out there. That is right. It is Friday. The weekend is here, but more importantly than all of that, it is time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks, including earnings this week from Tesla and Microsoft, and basically all of these stocks just ripping much, much higher this week. We kick things off like we always do with Meta Platforms, which started the week at 139. This thing has just been ripping over the last 6 months. I guess you can't really see it there, but over the last month, this stock is up 30%. My goodness. Finished the week close to 151. We will get Meta earnings next Wednesday on February 1st. I've got to think that they took a little bit of the traffic trends and a little bit of the earnings and looked at him at Meta and they said, well, we got to bring Donald Trump back. I don't know if they actually did that, but it looks like the former president is going to come back at some point to Facebook and Instagram. We'll see what kind of impact that has on the metrics. BuzzFeed marked a 30% gain on a reported Meta content creation deal. BuzzFeed is kind of a fledgling public company. I think their stock, well, it's up 80% today, but it was about $3.80 as they look to share some of their content already on Meta, maybe having an expansion of that. Meta Platforms going to expand an NBA deal to offer more than 50 games on VR. I think this is the coolest, probably shorter term use case for VR. The problem is, and some of you might say, well, oh, this is great. You know, they're going to make a bunch of money on this. No, you're not. The NBA, any deal with the NBA, the NFL, the MLB, but particularly the NBA and the NFL, it benefits the owners and the wealthy people that own those teams, and to a lesser degree, the players that play in the games. These are meant to be sponsorship. Yes, you can sell ads on top of this. Yes, this will be really cool. Yes, it's something that I'd want to definitely check out, but you're not going to see a tangible earnings from this type of thing, as the NBA is smart enough to know that if you make any kind of money doing this, they're going to capture that in licensing fees. Moving on to Apple, sort of the week at 139, ended up the week nearly 5% higher, about 4.8% higher, to finish the week very close to $146 per share. Apple is going to make next Thursday, February 2nd, a very busy day here on the channel, as they are going to report their earnings along with Amazon and Google as well. Apple may create tools to help users build AR apps for its upcoming headset. Now, this is not surprising, okay? There's Apple that makes a Swift product to learn how to code for their apps. This is not surprising. They'll make different software suites and different tools and things like that in order for you to make these things a little bit easier. Apple, Netflix, Coinbase, among creditors owed money by crypto exchange FTX. I certainly saw Coinbase on there as I was scanning through the document. I did not see Netflix or Apple. I'm not exactly sure why Apple would have money tied up onto the crypto service. Q4 shipments of smartphones are down 18%. That's the steepest decline in nearly 9 years. It's yet a little bit of supply chain, but likely waning demand, as these devices are just getting tiny incrementally better every year. And without the carrier subsidies, so the subsidies from AT&T, Verizon, T-Mobile, basically just giving you a phone if you kind of re-up your plan or trade in your old phone or things like that. Well, I don't know if the shipments would be even that good. And so that is kind of a risk with these companies, particularly Apple, is if those carrier subsidies go away, then Apple will have to subsidize that. And they certainly could. They could create a little subscription plan where you get a new phone every year, or they're going to have to figure out a way to more incrementally update these phones to where, you know, somebody on an iPhone 8, 9, or 10 doesn't feel like they've been completely left behind, let alone one of the previous models. Banks behind Zelle develop a digital wallet to compete. I laughed at this headline, to compete with PayPal and Apple. You look, whenever you get like group of bank, especially banks together, the technology is not going to be that great. Okay, it's not going to be as slick as PayPal, certainly not as slick as Apple. So I wouldn't be overly concerned with that, but it looks like the banks are trying to maybe roll up Zelle into a more competitive product. Apple looking to scale up its production in the country of India. That is according to the Prime Minister. He says the company, including Apple, is targeting up to 25% of their manufacturing up from about 5 to 7% currently. It is unclear how quickly and how Apple will be able to scale up their manufacturing in the country, but that obviously would be a good thing, I think, for investors to diversify out of the country of China. Moving on to Amazon, start of the week at 96, up over 6.2%. Finished the week closer to $102 per share. Amazon, like Apple and Google, are going to report their earnings next Thursday on February 2nd. Amazon's Coventry warehouse workers to go on strike over pay issues. Coventry warehouse is in central England, and workers are unhappy. They're complaining about working conditions, working hours, high injury rates, and an unrelenting pace of work. They're looking for just a modest increase, 50 pences per hour, going up from about, it looks like maybe 10.50 up to 11.50 or so. And they're trying to target that 15, look like pence per hour. I would assume Amazon will meet these demands to a certain degree and then eventually replace these workers over time with automation. Amazon dives deeper into healthcare with a generic prescription service. This is RX Pass. It's a new Prime benefit. It looks like for just $5 a month, you get access to eligible medications for one low flat fee of $5, and then you have them delivered free to your door. So I went to RX Pass, and they had some prices down here that were a lot more than $5 per month. I'm not exactly sure what you pay $5 per month for. Maybe, the price goes down once you log in and you subscribe for this $5, but it's interesting. It looks like it's medication, anything from like high blood pressure to anxiety. So we'll see how Amazon is able to roll this up. I think the challenge is, so when you get prescribed a medicine, you might be sitting there with your doctor, and typically what they ask you is, what pharmacy do you want to get this sent to? And typically you're talking about maybe a Target or a CVS or a Walgreens down the street or something like that. And so I think that's the challenge, is how do I convert these people from getting this at their Target or their CVS or maybe a local pharmacy or something like that, and then get it sent to Amazon. I think Amazon's got to get into the direct healthcare provider type of thing, to where if I need pain medication or if I need anxiety medicine or high blood pressure medicine, I'm actually going to a provider like provided by Amazon, with the understanding that I'm going to then get my prescription drugs delivered through Amazon. I think that would be the way to scale up that business. Amazon is going to start Amazon Air Cargo in India. We're going to be talking about a lot about India over the next, probably the next 20 years, as it is going to become the new population center. You also have a large segment of the population there that is going to go from, I guess we could describe it here in the United States as basically like poverty. As I've understood it, a lot of these people don't have power. A lot of these people don't have kind of the basic essentials. And then over the next decade or 2 decades, they're going to go from that to actually what maybe middle class is a little bit exaggeration of where they're going to end up becoming, but you're going to get a large segment of the population in the country of India go from basically just poverty conditions up to a larger and better standard of living. And those people are going to get internet. They are going to get probably cell phones. They are going to get things delivered to them from Amazon. And that is a great opportunity for these companies, including Amazon, which is going to start their air cargo. And they have Amazon has the benefit is they've already scaled this business up here in the United States. So they probably learned some things along the way. They're going to be able to scale that up probably quicker in the country of India. Moving on to Netflix. They obviously reported their earnings, I believe, last week. Started the week at $3.45. End of the week, the stock just keeps going up about 4.4%. to just blast through an area of resistance. I mean, these stocks are ripping higher. Okay, if you wanted to take profits on these, I think you've probably have that opportunity over the next week or so. Netflix, end of the week at about 360. Oscar nominations show a big drop for streamers like Netflix, Apple, and Amazon. A total of just 19 Oscar nominations this year for the streaming services, or barely half of the 37 nominations that the three garnered in 2022. I think some of this has to do with the pandemic. You probably had a halt in studios and things like that in terms of these productions. And then over the last year, the quote traditional studios and the non-streaming studios might have been able to open back up. There's also a larger amount of competition out there from the streamings and obviously the kind of linear TV devices as well. So obviously, look, award shows are just one thing. These companies, as we know with the streaming wars, there is one company that is profitable. It's Netflix. Everybody else is trying to play catch up, and that's likely one of the reasons why Netflix has rallied so hard off of the lows. Moving on to NVIDIA, speaking of ripping, started the week at 180 and it pulled nearly Tesla's up, believe it or not, even more than this. This thing is up 13% in a week to finish the week at $203 per share. This is despite dismal, like literally a deterioration, a stunning deterioration of Intel's earnings, but in some cases that could be obviously good for NVIDIA. I don't think NVIDIA feels a lot of pressure based on Intel. Intel's GPUs are, basically garbage. The server product that they have, while it is maybe seen as competitive to NVIDIA's GPUs inside kind of that AI and server environment, certainly far ahead of that. And then if you want to talk about the software that NVIDIA is developing, it's still just, I think, a couple $100 million run rate. Maybe it's up to $1 billion run rate in terms of its software as a service platform. Well, they're miles ahead of where Intel is. But boy, you are paying a steep price for this. And this one is trading 60 times forward earnings. Now, NVIDIA, we do not get earnings from them until February 22nd, but we do get AMD, I believe, maybe next week or the week after. So we'll get a read on that. But I tell you what, Intel down over 6%, but NVIDIA did not skip a beat as that stock continues to roar higher. Moving on to Google, start of the week at 98, dipped down to about $93, $94, but got it all back and more. End of the week up about a 1.3%. To finish the week right at about $99 and some change. Google, like Amazon and Apple, reports their earnings on Thursday, February 2nd. The Justice Department is going after Google, and they're filing a second antitrust against Google, alleging the company is in violation of the Sherman Act, calling for a breakup of the ad tech business, which would mark the biggest corporate breakup in decades. Now, we got some analyst commentary over this. Alphabet chimed in and saying, well, pretty much anybody that gets charged with any crime, their lawyers are going to say these charges are without merit and we are innocent. Now, analysts also chimed in and said that they see a limited financial hit from the DOJ antitrust suit. Here's how I sit with this. And look, if Google is required to break up their ad business, ultimately in the short run, like if they had to do it this year or next year, it would actually kind of suck because the markets are so down and it's not necessarily a great market to take that public. But what's more likely to happen is Google's fantastic corporate team of lawyers are going to stretch this out for years. And yes, maybe Google has to spin off portions of its ad business. And instead of owning the whole thing end to end 100%, they have to spit out the display business or spit out the ad tech business or whatever it happens to be. Well, if you can wait a couple of years, obviously we'll get through whatever kind of downtrend the market's in now. At some point, you're going to be back into maybe a resumption, essentially, of the bull market. And that would be a fantastic exit if they have to spin this out into a public company or spin it out to some private investors or any type of thing like that. You'd obviously get more money and better value if you are Google. We'll certainly keep an eye on this as we move forward. Google CEO Sundar Pichai, who I've got to feel is probably feeling the heat a little bit. If he screws up Google, man, his career in tech would virtually be over. He says the staff cuts, which they announced last week, where they were cutting about 10,000 jobs. He says, if you don't act clearly and decisively and early, I tell you what, Sundar, decisively, clearly, and especially early, would have been doing this like a year ago. I mean, Tesla, we were reporting on them cutting costs, cutting employees, cutting office space like a year ago. Okay, that was early. Okay, in the summertime of last year, you could have started laying these people off. Just doing it now is you're covering your own butt. But he says we can compound the problem and make it much worse. So we'll see what happens there. Obviously, Google's earnings next week will reflect a little bit of the cost cutting, but not enough, in my opinion. Moving on to Microsoft. This company reported earnings this week as it started at $241, dipped down after earnings, down to about $232, and then got it all back to finish the week up nearly 3%. Close to $248 and some change. Microsoft obviously reported those earnings. I went in depth on them. I think it was a 15-20 minute video, so we won't bore you. I'm sure most of you probably saw the video, or you could certainly tune into it after today's program. Revenue came in at $52.7 billion. That was basically flat year over year. And the critical thing with Microsoft is they announced their guidance on the call, and so you kind of have to wait until that airs. And it was pretty light. So the guidance for the upcoming quarter, relatively light. And I think it brings into question the back half of the year for Microsoft. But clearly investors didn't care, as you have the ChatGPT got a multi-billion-dollar investment from the maker of OpenAI. Now, I wrote an article on Seeking Alpha. I'll have in all the descriptions to the article. If you want to follow, if you are a subscriber of Seeking Alpha, or if it's a website that you frequent quite a bit, more than welcome to follow me. I have over 120,000 subscribers here on YouTube and just 873 followers here on Seeking Alpha. So you're more than welcome to come over there and check me out. After the earnings, in fact, on that night, I wrote this article and I said, I actually think this is an opportunity. Microsoft's kind of weakening guidance that they gave at just $50 to $51 billion when consensus was closer to $52, $53 billion. It's not that bad. And then what I did is I did a little bit more research on that OpenAI investment. And boy, it's a sharky deal for Microsoft. For an additional $10 billion investment into OpenAI, which again is the parent company of ChatGPT, Microsoft gets 75% of OpenAI profits until the $10 billion is recouped. So if OpenAI is a success, Microsoft is going to get back their $10 billion in profits, and then Microsoft gets 49% of the company, just under a controlling interest in the company. So they're free rolling. Okay, yeah, $10 billion is a lot, but they're virtually free rolling. I said, this sounds like a deal Kevin O'Leary makes a fledgling entrepreneur on the TV show Shark Tank, and not for one of the hottest startup companies on the planet. So I like this. I actually think, look, I don't think that there's a lot of discussion over AI, and a lot of the discussion is, oh, this is going to bury Google, or this is going to bury this company, or this is going to, do this, that, and the other. I look at this as like the next cloud computing. Okay, I remember watching the investor videos of cloud computing. Azure wasn't even a product over at Microsoft until I think it was about 2008. And I remember going through the investment thesis of Microsoft. They're like, cloud's the next big business of them. And at the time, it was like, really? Are you serious? And look, now intelligent cloud is the biggest business over at Microsoft. And so I think AI, that's what's going to happen over at Microsoft. Now, it doesn't mean Google is going to get buried. It doesn't mean Meta or any other company is just going to get buried. It means that this is going to be the next multi-billion, likely at some point, tens of billions of dollars a quarter for this company. And here we are at the early stages when the revenue is basically zero. That is why I see this as a fantastic opportunity. And on top of that, to operate AI, to operate the OpenAI servers and the ChatGPT, it takes significant server space. So any AI startup is basically going to be relying on Amazon, Google, Microsoft, maybe Oracle, IBM to a lesser degree. They are going to have to either pay these companies a boatload of money in order for that server space, or they're going to have to partner and sell their company to these companies, because you cannot run one of these AI things at scale without gigantic energy and servers. And I tell you what, if you're a startup and these are no money, no profit, no product type of things, that in this environment where there's no IPO market, there's not a line of investors out the door. OpenAI, like 2 years ago, would have probably just went public or had, private equity out the door giving them money. Now they have to give sharky type deals to Microsoft. So if this AI thing is the big thing, next big thing, Amazon, Google, Microsoft are going to get in on the ground floor and likely set their businesses up for the next decade of growth. That is my opinion. Microsoft is reportedly under fire in the EU for antitrust regulation over Teams. This relates to Slack, which is a Teams competitor that I believe is now owned by Salesforce.com. They allege that Microsoft is doing anti-competitive things, which I probably believe that they are, and we'll see whose corporate lawyers are better there. Moving on to Tesla. This stock started the week at, is this right? Are my glasses right? Maybe I need a prescription change. This stock started the week very close to $137 per share, and it went up 29% in a week, let alone today, up 11% to finish the week very close to $178 per share. Guys, that is like a $40 move on the stock in the week after the company reported their earnings. Earlier this week, they reported revenue at $24.32 billion. That was 37% year over year. It was in line with expectations. Whenever Tesla reports their earnings, it's hard for them to surprise one way or another because they announce their delivery totals every month, essentially, out of the company. And so by then, you know about what the revenue is going to be. They were good. We did like a 20 or 30-minute video on Tesla. They were good earnings. They were good. And the company was upbeat on the conference call, and whether or not that's hyperbole, whether or not it's Elon Musk over pumping, it remains to be seen. But the demand for Tesla's cars certainly seems to be there, and the fact that they dropped the price, and then what you did have was there was a lot of people waiting for their federal tax credits, okay? So they were waiting for those to come into effect into 2023, and then they go out and order their cars. I'm sure across the board, Ford, GM, Mercedes, Lexus, Toyota, whoever makes an EV probably saw an increase in demand in January. We'll see if it carries forward. Tesla confirmed, so this was a rumor on the earnings video that we did, but Tesla actually confirmed a $3.6 billion investment into a new Nevada plant, supposedly going to build enough battery cells for about 2 million light-duty vehicles annually at this state. Now, here's the rumors that I mean, Tesla is just full with rumors. If you're out there and you want to dig into them, they're more than willing to do that. Now, $3.6 billion is a fair amount of money. 2 million of these vehicles annually seems like a lot for the large semi. The rumor is you have an investor day coming up in March for Tesla. The rumor that I've been seeing is that they're going to announce a second product line to this, probably a smaller, lighter duty van that they can roll out probably to Tesla service technicians. If you have a Tesla, you understand that when you schedule service, I've had to have them come out and do like minor things on the interior of the car. And somebody usually comes out, sometimes they're in a Model S, but sometimes they come out like in a Ford van. And so I think what Tesla would do, roll out a van that they can roll out to their existing fleet and then obviously sell that into the market as well. That is the one rumor I've saw. The other rumor is that they'll announce some kind of $25,000, $30,000 car in March. I think the odds of that is less, but certainly investors are just starting to price that in this week as the stock again up 30%. Elon Musk denied a report he's considering raising $3 billion to pay down Twitter debt. In the tweet, though, he denied selling $3 billion in new Twitter shares. He did not necessarily deny raising $3 billion to pay off Twitter's debt. So we'll see on this massive rally, which you'll see from a technical perspective here in a moment, if Elon Musk sells more of his Tesla shares. Or in this, they also said that he potentially might be getting a margin loan on his Tesla shares. So essentially what a bank does is they say, based on the value of your Tesla shares, we'll loan you this amount of money. The risk, obviously, if Tesla continues to fall in price or were to fall in price, well, the bank would say, well, now you need to liquidate those shares in order to pay back the loan. So obviously, I think a margin loan, while it's risky for Mr. Musk individually, he would be pumping the heck out of this stock if he had not only his Twitter stake and his Tesla shares at stake on a margin loan. I think he'd be pumping the stock pretty hard. Lucid jumps 55%. It ended up being about 43% after a Saudi Arabia fund is taking, potentially, it's not final, but potentially taking over the fund. The Public Investment Fund of Saudi Arabia owns more than 62% of the company, and taking it private actually, I think, would keep it as a competitive threat to Tesla. Not that this company is banging down the door of Tesla or any vehicle maker for that fact, but if they were to stay a public company, the shares were just languish. I mean, this thing has just been on a straight arrow down. This one was probably had a high probability of bankruptcy or going out of business over the next 12 to 24 months. In fact, you had 25% short interest, and that is what, you have 25% short interest, and then a rumor that you might be taken private. Well, that's going to create a massive short squeeze. So the company, this is going to bail out this company. So either this public investment fund funded by Saudi Arabia is going to buy this company and take it private and then operate it in that sense, or the company's share price is now at a level where maybe they're going to be able to raise $1 billion or $2, and that'll give them the runway to survive for a period of time. Moving over to the technical segment of the show, and this should be exciting as the S&P 500, we talked about last week, it just had picked its head over the upper trend line, this black trend line, which has been intact. Well, it got back to the highs that we made back in, it looks like December. And so now, look, we were at a kind of a turning point last week, still there. Okay. And that's what makes next week so critical. Boy, if you have good earnings from Apple, especially, but Amazon and Meta as well, along with Google, and there's going to be dozens of other companies that report. Boy, if you get good earnings and we get the same momentum, we are going to have an official breakout on this thing. And if you keep the momentum, you'll retest these highs back here in August. I'll take you up to about 4,300 on the S&P 500. Not exactly anticipating that. I mean, at some point, this has got to give itself back. But here's the good news. I would not chase this rally if you are of the case that there's going to be, I get comments all the time. You're too bullish. You're too this. You're too that. You shouldn't be buying stocks right now. Well, you should be selling right now. If that's been your comments over the last several weeks, you should be selling. You should be taking profits. This is the time, because at some point, this thing is going to lose a little bit of momentum and pull back. And what we're looking for on a pullback is right now you'd want to pull back to this black trend line. That would take you back down to 3940 on the S&P 500. This would actually be extraordinarily healthy if you make some new highs, pull up here, pull back, and then subsequently just bounce and then rally higher. That would almost guarantee that these are the lows in the stock market back here on October. And then it doesn't mean that we go straight up and this uptrend just stays intact, but it means that at the very least you probably start trading in a new range, maybe as high as, we'll call it 4,200 on the S&P 500, and then maybe as low as about 3,800, and you just kind of just start chopping sideways, which I actually think would be relatively healthy in the stock market. If we have some massive V-shaped recovery, I'm taking profits on some of this stuff. I mean, boy, you can lock in some really firm short-term profits. I guess the downside with the S&P 500 is if the earnings suck next week, you break through this black trend line, this would be viewed as essentially a temporary breakout. Then the key area everybody would be watching are this large consolidation of, and large is relative, but there's a fair amount of consolidation at the, we'll call it 3,800 level on the S&P 500, give or take a couple of percentage points. You would not want the pullback to breach down below that. Then you're retesting these lows down here. And then you're a higher probability of piercing through them, buying opportunities, in my opinion, if you pierce through them. But you're watching if you do break down next week and you start breaking lower on the S&P 500, you would be watching very closely that 3,800 level. You would not want that to be breached if you were bullish these markets. Speaking of bullish, look at Meta. This thing is on fire. I mean, holy crap. This thing, it was 117 like a couple of weeks ago, and now here we are at 150. We talked about how on the show there is a level up here of consolidation at 150. I said I was in Meta, so once it broke over this black line, I picked up just a couple of shares. I mean, I'm not going to be paying for my Super Bowl ticket with my Meta investment. I kind of wish I had bought a little bit more of it, but I peeled some off today. I'm holding a little bit into next week just as kind of for fun. But we came up here to a resistance area. It's a little bit bit higher, up to 155. So if you didn't sell today and you're looking for shorter term gain, longer term stuff, I wouldn't really worry about it. But yeah, this is beautiful. Now, some of you might say, well, this green trend line it's over. Okay. You've broken out decisively above that. I'm not going to take it off, because if Meta gets rejected at this level, get rejected on earnings, you are looking for a back test to that line. And we actually have 3 converging kind of lines. Okay. So there's this longer term black line, which acted as support in the past. There is now what I would consider maybe a newer uptrend. Maybe I'll turn this to orange so we can kind of decipher them. This orange line could be the new uptrend. If these are the lows, really the lows are back down here in October and November, but we're kind of counting the trend here. This could be the new uptrend. You would actually expect a back test to kind of all 3 of this. And so if it happens in the shorter term, a back test to 125, 130, depending on earnings next week in Meta, I might be getting back into this one for the longer term. Really, I'm just in it for the shorter term momentum, as this momentum has just been, I mean, this is crystal clear. Once you broke over this black line, it was just off to the races. But depending on the earnings, again, those are Wednesday 2-1. And depending on how Mark sounds about his crazy little goggles and spending a ton of money on those, which he should be spending his own money and not the company money, but depending on how things sound, we might be getting back on this one for the longer term. Speaking of breakouts, Apple broke out this week. We talked about how this orange trend line has just been trending down. It was, the path of least resistance was down with Apple, but boy, it found some support down here. I put in a new kind of bluish line today. We're still working on this kind of, it's not a steep down. It's not like Tesla, okay, or like Netflix was, or like Meta was, where you have this like straight line down. It's a little more sideways. I looked at American Express today. It reminds me of the American Express chart, where you have this really longer upturn, and then you've kind of gone sideways to down, and we broke out from that this week. So we broke out above that. Could potentially mean these were the lows back in January. You're starting what would maybe be kind of a newer uptrend at some point. You would expect some kind of pullback. You should meet some resistance up here at 149 for Apple. There should be support for the stock at 137. That might coincide with kind of an upper trend line here. We'll monitor Apple next week. I would be on the sidelines on this stock, if you're trying to add to it, or if you're even on the shorter term side, I would probably just be out of this. I obviously still hold my position. This is my number one position, in part because Amazon has underperformed over the last year or so, but boy, we had a breakout this week, very similar to a lot of the stocks, kind of broke out over and over trend line. Now, Amazon's a little bit more complicated. It depends on how you want to draw this line in, so I'm not ready to say that Amazon is completely broken out, but I tell you what, you get positive news on those earnings next week on Amazon. Again, those come Thursday, February 2nd. This stock, out of all of these stocks in particular, it used to be Netflix. So Netflix had this bigger drop. It had this big gap, and we talked about, boy, if this stock got momentum, it could rip, and it certainly did. Amazon's in a little bit of that space. It doesn't have the big gaps, but boy, it has a lot of airspace before it really just gets back to a key area of resistance all the way up here at 145. Now, I think it's got to churn through this, but you get momentum on this stock. If this momentum stays, look, you can go from 100 back up to 140 if you want to take profits anywhere along here with Amazon. I wouldn't blame them. I think the downside with Amazon is retesting these lows we made back in January, back down at about $80. There's clear support for the stock, demand for the stock inside this green box from 81 up to about 100. I would be monitoring this one over the next week. Netflix just keeps going. We talked about it a little bit on the show. Like, if the rest of these stocks start performing like Netflix, well, they are just going to continue to go up. This one peaked up over, I talked about this level at 340. I thought, we're going to hit our head on this one and pull back. Nope, we just popped right above that. There is some resistance up here a little bit higher at 395. If you get above 395, you are probably filling this gap up here and getting back to, believe it or not, 516 on Netflix. I can't even believe I'm saying that. This short after this stock has just made this move. At some point, I feel like you're going to give this back. I keep saying that, but these stocks aren't giving them back. I think at some point, though, you give this back. And look, if you have a macro thesis that includes maybe a, quote, soft landing or not much of a recession, or really if the labor market doesn't deteriorate, stocks like these probably can keep doing well. Now, speaking of doing well, holy moly, NVIDIA is just looking sensational. We've talked about it here on the show. I hate this stock from a valuation perspective. I've got enough high PE, high beta stuff when it comes to Tesla and Amazon. Those are, well, top 5 stocks for me. If neither of those stocks are in your top 5 and you want NVIDIA to be your beta stock, by all means, don't let my bias of it being overvalued, because certainly you could make that argument with Amazon, Netflix, Tesla, any of these other stocks. You can make an argument for the most part that they're overvalued, but I'm already overweight consumer discretionary. This is looking beautiful from a technical perspective. I thought we'd hit some resistance here at 192, similar to Netflix. We powered up above that. It's going to take a heck of a move to get up above this, but I tell you what, you get above this level where NVIDIA is right now, and I mean, God knows, you could retest the highs, I guess, back up at 300. But any kind of pullback on NVIDIA, and in my opinion, it's a buy the dip. This is a clear pivot point with the stock from a technical perspective. Again, you have your own valuation discussions and how you feel about that. But from a technical perspective, this is a crystal clear reversal. Any pullback is a buy the dip from a technical perspective. Moving on to Google, trying to look like NVIDIA, has not been able to get through $100. That should be a hard level of resistance. My guess is Google just hovers here until they report their earnings on Thursday, although Meta does report the day before. So depending on how Meta does, that might trigger Google into earnings. So we'll see how that goes. A rejection from Google at the $100 level should take you back down to about 90. If these were the lows back in October and November, the 90 level should hold. If not, you pull back to about $85, $88 per share. That is probably your buying opportunity. Any further momentum in this one would take you easily back into the 109s, 110s, maybe as high as 120. I'm not talking about like after earnings, but over the next quarter or two, similar to the NVIDIA chart, when it reversed, it chopped its way up there. Similar thing could potentially happen with Google. Moving over to Microsoft, initially, after the company reported earnings, the company gapped up to this 250 level. Then they gave guidance. The stock pulled all the way back into our trend line, but then recovered and closed the week above trend, above the red trend line. Again, this red trend line can be drawn in a number of different ways. It's not as crystal clear as, say, the S&P 500 and some of these other stocks that we're looking at. But look, this one's still above trend. You would like for Microsoft to get above 265. That would take you above kind of the peaks of the previous highs. You get above 265. Now you are likely starting that type of uptrend where you have lows back here in November, higher set of lows in January. At some point, the markets give some back. You make new lows maybe in May or early spring or early summertime, and then you rebound maybe in the third or fourth quarter, start making higher highs. That is what you're looking for in the stock market, certainly with Microsoft looking like that might materialize. Now, the reversal of the week, maybe of the year already. Tesla has a nomination for reversal of the year. The stock obviously had been on a free fall might be an under exaggeration. The stock found support right about $100, 105 to be more specific, and then reversed back. This absolutely is snap gone. This downtrend is still intact. I don't want anybody to think that we can't keep things moving, but boy, you came all the way back. The momentum took you all the way back, closed it right at a level of resistance, which had held for basically 2 years, right about 178. So what you're looking for with Tesla is obviously a break higher here. You break higher here, I would likely believe that you're coming all the way back to probably 250 on this one. Maybe, it depends on how long this takes. I would guess you're coming back. You're going to fill this area. You will take pit stops. You'll pit stop at 209. There's another pit stop at 240. But if you get above 180, you have a pretty high probability, at least from a technical perspective, to just continue this downward trend that this stock is in. Gets up here to 240, 250. I will be peeling off more of some of my stock. I got stopped out of this one at basically where it's at. Once it broke this level, I was like, oh God. It came all the way down to your 105. I did not add to this, but look, if you look at my year-to-date stock performance of my portfolio, it's probably astronomically high. But I think you come up here potentially, again, that's if this level gets breached. If you go above 180, I think you're coming to 240, 250 on Tesla. And maybe quickly, we're talking over the next, into Investor Day, which I think is in March sometime. If you get, and then you would get rejected, I think, and then it's just a matter if you retest 105. The other scenario is you do get rejected at this area, and then it's all about if you can hold 105 on the way back. If you can hold a little bit above that, start a new rally, then obviously you're starting to look like NVIDIA. You're starting to look like Netflix. You're starting to look a little bit like Google. You're trying to form these bottoms, and we'll see if these are actually bottoms forming. If that's what we get heading into next week, we have Apple, we have Amazon, we have Google, we have a number of other different companies that we'll cover here on the channel. Hopefully you guys have a wonderful weekend. Go Cincinnati Bengals. Go San Francisco 49ers. It is going to be a very stressful week for me because if the Cincinnati Bengals make the Super Bowl again for a second straight year, I will be thousands of dollars lighter because I will be attending the Super Bowl in Arizona. If they don't make it, I will be sad, but at the same time, happy that I don't have to come out of my pocket of money that is harder to come by this year than, say, last year. Hopefully you guys have a wonderful weekend. Hit that like button, hit that subscribe button, and we'll see you again next week. Be safe this weekend, and good luck with your investments.